Okay, morning everyone. Welcome back to Money Kappa. Good to see you again. All right, so to recap, the S&P 500, it retreated around 0.35% on Monday's session as fund rebalanced the equity holdings. So sector-wise, I think defense stock as well as the energy led the decline, reacting negatively to the news of Trump and Zelensky meeting, which raised hope for the ceasefire, prompting the trades to unwind the Russian and also Ukraine war. So I expect a choppy trading session for today, and resistance remain kept at 6950 point level, with support is looking at 6800 point level, right? So for the US ring stocks that we have today, so we publish Airbnb, stock code ABNB. So the stock is on its pending breakout formation above, at this $138 level. Now we can expect that the stock to travel higher towards the $145 level on a strong momentum, followed by the next resistance at $155 level. Now, if the stock to reverse, do watch out at 130 level for the immediate support, as it could indicate an initial trend of reversal. Also, next we have Salesforce, stock code CRM. So looking at just now, the counter charted a higher high market structure, forming a higher low formation, breaching this $260 level, eyeing to reach higher towards this 280 level. So if the stock to climb up higher, we could see that it might travel towards this 295 level. So now, if the stock to slice lower, below 250 level, this might signals to a shift of a bearish structure. Right. Yeah, for those trading A50 futures, right? So China A50 traded almost sideways to down on yesterday's session, as the Finance Ministry pledged the proactive fiscal policy, but this was overshadowed by the industrial profit fell in November, which I believe dampening the sentiment in the manufacturing sector, which resulting to an almost few sessions of sideways trend, right? So yeah, for the traders, maybe you might you might be asking what to expect next, right? So I think by looking at the chart here, sentiment are mixed at this point in time. So expect for further consolidation around the this level at 15,500. I mean, at least below this 15,500. But to me, I mean, bullish sentiment remains intact. And if you see here, this downtrend line has been breached recently, and it's just a matter of the pullback completion, right? Right. So for the WTI futures, crude oil price futures, where it rallied on yesterday's session to close at 57.80 level, as there's no outcome from the Trump-Zelensky meeting, which removed the immediate threat of Russian supply returning to the market. So I think buying was further supported by the renewed Middle East tension, strikes in Yemen, right? Also, which helps the traders show off the bearish report yesterday, following the surprise in crude build. Also, I think at this point, all is very volatile, and we hold our negative stance unchanged, eyeing for this 55 or even $53 level. So looking at our local market, well, it rose around around 0.23% to lock at 1680.99 on Monday's session, as investors accumulated heavyweight like Maybanks, Tenaga to rebalance the portfolio. So I think it's quite impressive that our market able to gain higher uh, at the year end. Many research house are expecting that the KLCI to be only at the level of 1,006 dot, right? So I would say that our market performed better than expected this year, hoping for even better performance next year, right? However, uh, if you look at the FKLI, well, this futures, right? It remained flat yesterday, trading at the persistent discount to each other of this index, right? As traders are resistant to chase the rally due to some risk in plantation sector, which is also disrupting the plantation operation and dampening the broader sentiment. So, well, at least for now, we do not discount for any pullback to happen after the rally, because if you see here, our market has been bullish for at least 2 weeks, right? 2 3 weeks without any retracement. So yeah, for the case of FKLI, it is the same, right? So if pullback to happen, I'm expecting it to be blocked by this blue rectangle zone level, as it is resistance become, right? So yeah, so pointing at to point at this heat map right here. So uh, yeah, some of you have asked me on this newly listed IAB and some of the stocks. So let's see what I prepared, and let me explain to you guys as well. Right. So okay, for this IAB, right? So the trend is pretty much positive right now. You can see here. Uh, uh, yeah, we can't deny that the trend line is pointing upward. So now that it has breached above the previous level, right? So to me, the positive bullish momentum should stay to target for the next resistance. So now, if you are using the Fibonacci projection level, right, from the previous wave, which is right here, so we'll get 1 ringgit and 13 cent, followed by 1 ringgit and 23 cent. And also, since we recently published this IAB in our trading stocks, so we maintain our support at 104 together with 97 cent level. Right. So there's this question regarding Opstar as well. So if you ask me, I'll put this stock aside first. Why? Because I'm waiting for this stock to at least breach this downtrend line first for me to confirm that the trend right here is broken. So cause to me, it is still in downtrend, still at this juncture, and from yesterday's move, it only hit this trend line, which maybe the stock can reject the trend line and push lower. So if you, for you to that have been following this Opstar, maybe you can wait for the first SOP to be broken first, right? Same goes to Guan Chong as well. So maybe some of you are happy to see that the stock is finally moving. Well, not only move, but it surged, I think, around almost 8% yesterday, 7%, 8%, right? So the overall trend is still bearish right now. So I think the closest resistance that I'm waiting is the 81 cent level, which also align with this 20-day moving average. So in the coming session, if you notice that this GCB is crossing above this 81 cent, together with the crossing of the MACD line, I think my take is that uh, the initial reversal wave has started, and make sure that the structure is firm, or yeah, it's very firm for the stock to able to climb higher, right? So for our Malaysia trading stocks for today, we have here Northeast Group, or NE. So the stock is in its pending breakout at the 90 cent level on a strong volume. So with that, we expected the momentum to remain bullish and the stock able to climb further after the breakout to test the 94 cent level, followed by 1 ringgit level. So if the stock to clear this 83 cent support, I think this could shift to a bearish structure. Also, next we have uh, HE Group, right? So the stock is also experiencing a pending breakout at this 36 level. So if the stock to remain bullish, we're expecting that the price to reach 39 cent level in the coming session. Next resistance is at 42 cent level, and keep an eye at the 33 cent support for any attempt of reversal, right? So for the FCPO, right? Yesterday on yesterday's session, it retraced to close at 4047 on Monday, right? As traders engage in profit taking after the recent 4-day rally, tracking the weakness of the soy oil, right? However, I think downside was limited by the bullish export data, which signals that the demand is recovering. So as long as the commodity uh, trades below the 4180, which is our stop loss level, we hold our bearish stance, expecting that the price to go lower. Right. So I think that's all I have for today. I'll stop here. Happy trading. Thanks everyone, and I pass to Queenie. Thanks.
Okay. Morning, everyone, and thank you, Aiman, for the insightful presentation. Let me just open my file. Okay. So today we have issued initiation report, a Bursa Rise initiation report on CCK Consolidated Berhad. So CCK is a food retailer in East Malaysia. It is the largest fresh mart operator in Sarawak, where about 78% of their revenue come from retail, which involve retail and wholesale of fresh and cold storage products like meat and poultry, frozen food, as well as fruits and vegetables. And then the rest of the revenue come from poultry, which is about 12% of the revenue, and then 9% come from prawn, and 2% come from food services. So like my title here, defensive-based Indonesian growth ramp up. So its revenue and profit will be driven mainly by retail business segment, where in retail there is two countries. First one being East Malaysia, which is mainly Sarawak and Sabah. And then second one, Indonesia, which is because of its new plant. I'll start off with the Malaysia first. So as for Malaysia, they have an edge, which is vertically integrated, skill-driven retail model. So as Sarawak's largest fresh mart operator, its skill and vertically integrated model support strong pricing power and cost efficiency. That's why you can see its margin have improved from 18% in 2022 to 21% in 2024, and it's quite and we think that the margin is sustainable. So with 73 retail outlets across East Malaysia and a planned rollout of 2 new stores annually, CCK's defensive cash-based consumer staples business is well positioned to grow alongside Sarawak's GDP, which is projected to expand at an average 4.6% over 2026 to 2030 under the 13 Malaysia Plan. So as is CCK local mart, local and CCK fresh mart is registered under MyKaseh. So it is also one of the company that benefit from the wage growth and MyKaseh assistance. Which sustains spending on essential food items. As a mass market fresh food retailer with a broad reach and affordable pricing, it is well positioned to capture incremental wallet share from lower and middle income households. because of the MyCasa assistance, and this supports resilient same-store sales growth and stable cash flow going forward. So back home in East Malaysia, the company's retail business is going to bolster by the Sarawak's urbanization as well as the GDP growth. Okay, and going back to Indonesia. In Indonesia, for retail segment, they have a 60% owned subsidiary called Aldiomart, and the other 40% was sold to the Credo in August 2024. So this PT Aldiomart plans to triple capacity via a third facility, which is adding another 3,000 to 4,000 tons of monthly capacity by 1st Q26 to meet unmet demand and expand nationwide distribution, as its current processing plant is already at optimal utilization rate. So the plant is backed by a strong execution track record, having double capacity from 1,000 tons per month to 2,000 tons per month in 2020. Alongside strong market absorption that saw Indonesia sales rise from 116 million in 2020 to over 200 million in 2024. So within 4 years, they can almost double its sales from Indonesia. So our FY26 forecast assumes a consolidated 20% utilization rate, which is about 800 tons per month, which is near its break-even point, break-even of its OPEX, with faster ramp-up offering valuation upside, and vice versa. So all in all, we are initiating coverage with a buy and TP of 1.62, which is about 38% upside and 3% yield. Okay, so the TP is derived from 13 times PE on its FY26 F earnings with a 2% ESG premium. The valuation is in line with a -2 standard deviation from the Bursa Consumer Index, given CCK's smaller cap. So key risks to our forecast and recommendation will be slower than expected expansion or utilization rate in Indonesia, and forex fluctuations. So if you look in our report, you can look at this scenario analysis for FY26. Let's say if a new plant utilization rate is at 10%, then estimated additional sales to Indonesia will be about 40 million. And as per our assumption, we are using 20%, which is this one. So this is the peers for CCK. This is all the local retailers, and you can see most of them have a higher PE. That's why we think that the current PE of CCK, which is about 9 times, is very undemanding. And of course, a lot of these are big because they are bigger cap. That's why we give a big discount on its PE. Okay. We also input a lot of charts like revenue and GP trends, included the forecasted one. You may have a look, and in the revenue, you can clearly see that retail is the one that driving the growth going forward in our forecast, and the rest are mostly not really growing, except for poultry. Poultry will grow a bit because there's still capacity, and when your Malaysia retail growing, then more supply, which is from poultry, is needed. So beyond FY25, that's where we see the inflection of earnings, which is mainly driven by retail from Malaysia as well as Indonesia, because Indonesia plant is going to start in first Q FY 26. Yeah, that's all from me. We will end today morning kappa session. Thank you everyone for joining. Hope to see you guys again tomorrow. Thank you.